CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back on Crypto Corner. Today we are joined by Sandeep Nailwal. He's co-founder at Polygon. Sandeep, hi, thank you for joining in. What is, first of all, your sense on the all-time highs and then the buoyancy that we've seen in cryptos in 2025?
Due to the regulatory positivity that has come in the US for crypto overall, starting with Bitcoin, then Ethereum, stable coins, so many things that you are seeing. The markets and I would say the larger and the wider participants in the markets are seeing it as a actual asset class, plus also the deeper integration of Bitcoin using these digital asset treasuries, started with MicroStrategy famously, and then many of these Ethereum DATs have come in, and many other projects are also launching DATs, which essentially allows Nasdaq and NYSE listed companies to acquire these assets, and these entities become digital asset treasury companies. So a lot of stock market participants can participate. So that is opening up floodgates of institutional capital into crypto and stable coins, and US going all out on stable coins and adopting stable coins as one of the strategic assets of US has also contributed to it. So especially now when you see in the macro markets, I think the Fed is probably going to turn dovish in their stance and cut the rates and all that. And due to that, a lot of liquidity is going to hit the market, and which is going to get deployed in various asset classes. And crypto is now a legitimate, proper asset class where institutional capital is being deployed right now. So it's going to be like this for some time at least.
Sandeep, also, how would you take a look at the Indian markets now? We are looking at higher adoption on the retail side. The ticket size perhaps is still on the low side, but technology, would you say, when it comes to institutional adoption, still continues to lag?
I don't think technology continues to lag. Technology is pretty global in nature. Technology is the same technology is available in India also. But I think because we have still, as a country, as a nation, India, we have not adopted crypto with open arms yet. So it's still going to be a little bit slower adoption in terms of on the institutional level. But retail adoption, where retail can get access to using some of the products that are available to them, using the exchanges, and whatnot, retail is getting onboarded. It's the institutions which are not able to right now engage in crypto. Also, the wider retail and institutional capital that is available in India, that also cannot enjoy the benefits of the asset class. I mean, in US, in Bitcoin alone, it has created generational wealth for millions and millions of people. And hopefully in India also slowly it will open, and there is still a lot of upside in let's say Bitcoin, Ethereum, many other high quality fundamental projects that are building in the space.
Sandeep, just what is Polygon's outlook now? What is the next leap from here on for you? I mean, there's so much that you have been doing, but the next year, where do you see yourself in sense of scaling, transparency, efficiency, or creating more apps?
Polygon, I mean, you might have seen yesterday only Polymarket, which is the largest crypto app built in the entire space, which retail app, I would say. Yesterday, they received $2 billion in funding from New York Stock Exchange, and it's fully built on Polygon. And this should be something that in Indian circles at least should be celebrated big time. And this is one of the bigger achievements of crypto. And with Polygon, we are constantly focused on these real world use cases. Like, we are less focused on speculative use cases like meme coins and all that. We are more focused on real world use cases. And this is actually fully determined using the stable coins, for example. Stable coins Polygon remains to be the number one daily active users chain or for USDC is the rank 1. For USDT, which is the number 1 stable coin, it's rank 3. For non-USD stable coins, Polygon peers has around 60 to 70% market share. If you include for non-USD, non-Euro, it has 90% market share. So we are very heavily leaning into payments and stablecoin. And I almost consider Polygon as this neo fintech, which includes various elements of fintech, combined with the background underlying protocol, which is the Polygon protocol, the blockchain where all of these things run on top of.
Sandeep, while in the US, as you mentioned, it's leading in terms of regulation with the Genius Act. How do you look at the other countries look at crypto in sense of regulation, adoption, or even a broader framework for that matter?
I mean, we see, vastly positive stances from every geography whatsoever. Right now, I would tell you that literally I get buzzed by some or the other governments or government bodies of various geographies to come and speak at their events and see what Polygon can do there. Many of the times we see the domicile requests that, if we move Polygon to this place, then we will be provided X amount of working space. If we can bring developers there, then we will get X amount of funding and many things. Polygon, though, has is much further ahead in that journey to kind of for these benefits. But point is that every government that we are seeing, whether it's Middle East, Southeast Asia, Indian subcontinent, everywhere, we see positive and open arms discussions with crypto and Polygon related stuff everywhere.
Well, that point is well taken. So much being done and so much money being deployed as well. And congratulations, by the way, on New York Stock Exchange putting in $2 billion on your app, which is Polymarket there. Sandeep, always a pleasure speaking to you. But with that, that's the time for a break on the show. On the other side, we'll talk market and stock specifics.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.